Okay, welcome to the Swing Trading with Cycles channel. We're going to look at semiconductors today. We're going to look at the index, then we'll look at AMD, and we'll look at Nvidia. So this is the channel where we time the markets without predicting the markets. We do that by focusing on trend analysis. And then we add cycles to keep it simple. That helps us just easily quantify this thing has been rallying for this many weeks, or declining for this many weeks, or rallying for this many months, etc. So I want to review just popular large sector, and obviously because this is a large sector, it's strategically important where it goes. A lot of the market is going to follow potentially, right? This sector tends to lead. So this is semis. So we're going to look at SOXX first, SOXX. We'll also look at SMH. But as I often do, we'll look at the yearly chart first. And this is October 11th, Tuesday night. And, we're going to look at some big time frames here. So like the nitty gritty detail, whether it's like October 11th or like October 15th, a little bit less important. That said, we obviously have a big CPI number coming up this week. We have the Fed minutes tomorrow on the 12th. The CPI number is the 13th. So we're going to get some volatility. But here we're talking about pretty long sort of time scales. So this is the SOXX index. It tracks semiconductors. This is your annual. This is a chart, an annual chart, meaning every candle here is one entire year of price action. And so this starts on 2001, which is an unfortunate time to start, given, that was right after the bubble had burst. So we had a red year, and then 2002, we had another red year. It also made a swing high. That's important. And as always, take a look at the links in the description. Lots of additional content. Obviously, you can go to the page, take a look. I have playlists set up. The most important thing you want to take a look at if you're not familiar with it is the overview, Cycles 101. That will give you a grounding, really important concept. And it's not just a cycles concept, it's a price action concept of a swing high. So this candle is a high, right? And in this case, it's a little wonky because we don't have any previous data. But this candle goes below the low from this candle. So we made a new low. That's another way of thinking about that. We made a lower low. So making a lower low creates a swing high. So this thing becomes a swing high. So that is 2001. So we make that lower low, and then the following year, so 2003, it's a green year. So if you bought at the open and you sold at the close, you did okay. But it is an inside year also, which means another important concept. It didn't make a new high and it didn't make a new low. It just stayed inside the range of the previous candle. It did close above this important low. Call that 44.89. So 45 bucks, let's call that. And then the following year, we made a slight higher high and then just kind of failed, but didn't really get that much downside. I mean, and it's funny, like people like, and if you're watching this channel, you probably do think price action means something, technical analysis means something. But notice that this decline stopped right around the same level. And I'll say zone, not level, right? Because they're not precise levels. They're more like zones, an area where a lot of people sold or an area where a lot of people bought. That may become resistance or support, some kind of a cluster area. So notice that we kind of stopped right there. That's not a coincidence, right? And then we bounced back up. So this I would actually call consolidation, even though it made a higher high. Now it did set us up for a potential swing high, right? We dropped below this low again, and that's your swing high. And that's a lower high than this, which is a lower high than this. So that's a bad setup. But at the same time, we certainly didn't make a new lower low. And this is more of a judgment call. How much of this candle's range did we break? And we didn't break a whole lot of it. So it doesn't always have to be an inside candle for it to be consolidation. That's a sort of a judgment call when you have a little bit more experience. So you could call this consolidation, and this is certainly consolidation because it's an inside candle. And remember, these are like full years of price action. So a lot happens inside this candle, and that's why it's important to zoom out, because all those same patterns mean the same things on this larger time frame. They're just even more substantial, like the swing high, for instance, or the swing low. And so this is an inside year. it was green. So again, if you bought the open and sold the close, you did okay. You were patient, but you were still inside this range and still basically inside. Again, the other thing to keep in mind that's like to really kind of understand, I'll draw like a sort of triangle or rectangle around it. That might make it easier to see. But like these candles are all inside the range, right? 1, 2, 3, 4, 5. Those 5 candles, so 5 years, because each candle is a year, are all inside the range of the 2002 candle. That big monster bearish candle. So that's important to understand. Very important to understand. So this is an inside candle. Then we make a slight higher high. So this is all just consolidation. I mean, it's like, obviously, if you were trading in here, this would have been really frustrating. I mean, this is a doji year, which means we make a high, we make a low, and then we just kind of come back to the same price that we opened. Very, very frustrating. And then we just chop around again. It's 2007. And of course, we know what happened. 2007, the financial crisis. We get ourselves another swing high, right? So 2008 becomes your big down year, your big swing high. Boom. And then we spend 2009 consolidating an inside year inside this big monster red candle. And notice the low that we made this year, right, in 2008. So that's important. Semiconductors bottomed before the broader market did. The S&P 500 didn't bottom until March 2009. And this bottomed, obviously, you can see it with your own eyeballs. It bottomed in 2008, not 2009. So that's another, like what I was kind of alluding to, in the sense that semis tend to lead, right? It bottomed first. So this is going to be an important sector to watch, and I will continue to put out video updates. And so we have this consolidation, and the next year we make a higher high. So we make a high above this high. We would need to technically get above this high to have this become a swing low, right? The same way this was a swing high with making lows below it, this becomes a swing low, making highs above it. So it literally took us 3 years of, again, this is just consolidation the same way this is, right? In this case, it resolved upward, so that's great. But that was still 3 years of being patient, more or less. And then we got the explosion in 2013. We broke above this kind of area. So like once we were above that 64 area, boom, we just kept running. So we made a move in 2013 and another higher high 2014. This is a really ugly year, 2015. That would have been tough to stay long. But then we make a higher high in 2016, another higher high, another higher high, another higher high, another higher high. And this is a terrible year, 2018. Obviously, it was red. But we just be clear, we've been making higher highs, right? So when did we start making higher highs? The first higher high was in 2013. So that's 1 year, 2 years, 3 years. This is technically a higher high, even though it's red. It is a higher high, meaning we made a higher high above the previous candle. So it's 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, 8 years, 9 years of higher highs. 9 years of higher highs. Now that's interesting, right? Because we've been making higher highs for 9 years in a row. And if you think about the way trends work, you have pullbacks even in an uptrend. You're going to have higher lows. And so it's a question of, are we just getting one of those higher lows? And even if we are, it's going to feel painful on a yearly chart because that's an entire year going red. And obviously this big monster red candle, is the year 2022, right? And so does that look familiar to you? Kind of like this, right? And this, we're going to have a big fat red candle this year. Now the question is going to be, what kind of follow up do we get? Do we get something like this, just years of messy action, or something like this, where again, we don't make a high above that high for quite some time? Now you can still make money inside this range, especially when you drill down. But when you hear something like Stanley Druckenmiller say the market could go sideways for the next 10 years, this is what that might look like, right? This is what that might be setting up, that we were not able to get outside of this range for a while. And this is your 10-year moving average. This line here, we could come down and test it, right? And what I think the real, let's say not doomsday, but like really ugly kind of scary move would be, down to like the 168 level. And that would just be testing your COVID low, right? That would be testing your low from 2020. You think about the chart structurally here, we could come down and make that low and then still bounce hard and still continue a bull trend into the 2030s, let's say. But that's important to know that we could have a few years of downside. What's immediately important to know is when we made that low below last year's low. You got to know about that, right? Last year's low was 375, basically. Call it 375. We're sitting here at 305. So we're 70 points lower than where it was important to pull the ripcord. Now, I've been cautious since January when the broader market had the swing high that started this downtrend. The Qs actually topped out in November of 2021. All that to say, you can find the bearish signals on lower time frames, but if you were holding out all hope, you really needed to pull the ripcord around 370 and to be clear, we actually made a new high this year above this high. So this is actually a bearish outside year where we make a new high and then we make a new low. You can't change that now. Now, we could get some kind of crazy, furious rally in the next 2.5 months that turns this green, maybe. That would be crazy to get. Imagine we went, we climbed 260 points in the next, 2.5 months. That would be pretty crazy. So that's what this is setting up. It's not to scare folks, but it's important to know going down to 168 wouldn't even be crazy if you look at the structure of this chart. It would cause you to slice through the 10-year moving average, which, if we're having a major cycle low, is not surprising in the least. And while we're on SOXX, I'll just look at SMH because I suspect it's the same pattern. Yeah, same exact pattern. They have a different basket of stocks in them, but they're both ETFs that you can buy for the rebound, or if you're aggressive, you could certainly think to even short. So this started in 2000, so just a little bit sooner. We had that kind of big dump, right? And in this case, that was already a red year, but then you got even more downside once you went below that low. And then you consolidate. So it's the same kind of thing. You consolidated for all this time. In this case, you made a lower low below that one. And then you just had a rocket ship up. But it's the same pattern. You can see this is already drawn. So I think I definitely spoke to this in some previous video. But, or at the very least, I was looking at this analysis on my own. This is important to know about. On SMH, that low of last year was 216. So once we went below that, bad news bears. We're at 176 right now. Plenty of time to pull the ripcord and get out. And for SMH, that COVID low, and again, doesn't mean we have to get down there, but important to be aware of it, right? Would get you down to around the 95, 96 area. So let's look at and we look at the monthly chart, same kind of idea, different sort of frame of reference. This is your 50-month moving average. So, you could call that just about, just a little over 5 years. And we did not close below. We flirted with it in September, right above it. Now we've sliced through it, and we'll see if we close the month below it. I suspect we will. I'm not really big on moving averages. I think if you're waiting for a moving average cross, you're usually late to the move. But it is helpful just visually to see that, right? This was your global financial crisis where we lived under this thing for many, many months, right? Over a year, right? We fell below. I'll zoom in. We fell below it, came back. This is your swing high, your lower high to this, and then just cascaded lower. This is your another lower high, didn't get anywhere near it. So we spent a long time beneath it. But this is a great example. Look at this whole period where we're in a nice uptrend. This whole uptrend happens below the 50-month moving average. Now, if you're one of those guys that's like, oh, I'll never trade something below the 200, you would have missed out on all this up move. That's why it's important to understand the price action. Don't let the indicators become sort of a handicap for you. So that's another kind of view of this. SOXX, same pattern. I'll just go back to that one really quickly. Right. So in that case, we did kiss the 15-month moving average last month, but we might have closed below it, actually. Let's see. What is the 50 month? That was 317. And we closed at 3. Yeah, so we closed a little bit below it. A little bit above it, I should say. And same kind of idea with your 200-week moving average. I mean, look at this. This looked like oh, maybe we bottomed right above the 200-week moving average. Here's a rally, and then no. Just to be clear, that's your cycle. I thought I had marked this actually. Oh, this is SOXX. But if we look at SMH, I had a cycle count here, right? So bottomed on week 16, just like the market, just like I should say just like the Qs. And then we had a rally for 6 weeks. So 1 week, 2, 3, 4, 5, 6. This was your high. And then we just cascaded lower from there. 7, 8, 9, 10, 11, 12, 13. This is your lower high, 14. Now, we've had so much downside that wouldn't be surprised to get some kind of furious bounce soon. Like, look at this bounce. Very convincing in real time. I mean, that's after this massive decline. You have this kind of bounce. That's important to get a sense of. The more massive the decline, the more violent the bounce can be. It doesn't mean you can trust it anymore. You still have to look at those higher time frames. And I mean, my God, this is now officially below the 200-week moving average. And again, we spend many, many, many months below the 200-week moving average in a bear trend. And so this could be just a start of something. Again, some kind of temporary bounce notwithstanding, obviously. And so those are the indices. Let's look at Nvidia and AMD. So we'll look at Nvidia first. We'll look at the yearly chart, and it's going to be very similar. In this case, we've outperformed. So again, same kind of idea. But in this case, we are just now getting to making a lower high, or excuse me, breaking below last year's low. So last year's low was 115.67. And you can see we're like teasing that level right now, right? And so that's interesting because that means you could say, oh, well, that's a sign of strength. Look how far below last year's average low SMH and SOXX were. That's the index that this is a part of, obviously. But that could also just mean this is going to get dragged down further, right? This is the one that hasn't gotten sold as much just yet. But what we're setting up here is a massive swing high here. But notice, that could have been a swing high and ended up just being consolidation, and then we had a nice 3-year move after. That was the whole blow up about. I think they mismanaged inventory because of people using GPUs for crypto mining. That's another swing high, right? So that's important. This thing hasn't really had that many long periods of decline. I mean, even the sort of 2001 bubble was just one red year, right? And then we kind of resumed an uptrend for the most part. I mean, this was a tough year to trade in, 2004. And you certainly had this period right here. So totally possible that we're heading into something that looks more like this, right? Instead of something that looks like this. That's important to know about. And I'd say for this one, you really want to, I mean, for the 47 level kind of almost looks unthinkable, but that's on the table. I would say probably more likely you can think about maybe like somewhere like right here, right? This was an important high where price got kind of rejected. It obviously rallied back. So you could easily see us go down to something like 74. That's something to prepare yourself for. Doesn't mean you buy with both hands there. That's where we'd be looking for some kind of reversal though, maybe some kind of swing low. Always looking for that price action signal first. We'll definitely be talking about that on this channel. And if you look at the monthly chart for Nvidia, so in this case, we did close below the 50-month moving average, which is interesting. So it was kind of leading to the downside in that sense. And we are just, I mean, what has the decline been so far? So we have declined, what is that? About, call it 67%. My God. Now that's after like this crazy rally of what, 7,000%. But that's how these things work. You can have a 7,000% gain, and if you lose 70% of it, I mean, that's just devastating, right? Like, now that doesn't mean it has to stop here. We're always looking like it looked like maybe we had to stop here. And so at some point, you're going to get some kind of lower high, maybe even a month that closes green. And maybe that'll be your bottom. We don't know. Like, we'll have to see in real time. but that's important to note. And this is following, I would say, a similar cycle count to SMH. So our weekly cycle started here. We had our top on week 6. This is now week 14, right? So in this case, you know, you can kind of draw the daily cycles from here to like here, right? That's a really long one, right? So now maybe we're actually going to get a pretty short one, right? Because it looks like this daily cycle had a top here. We had this decline. I mean, I guess you could make an argument that, right, that's a really short weekly cycle, right? And then this new one starts and then declines here. And this is why I say don't get bent out of shape about the counts. Focus on the price action, right? We know we had this little rally and now we're getting this decline, which has made a lower low below here. At some point, we're going to expect another lower high. You know, and so again, we're going to expect another rally, and that's probably going to fail. So we're going to be on the lookout when that rally happens to short the swing high. Not short preemptively, wait for the swing high, and then short. And in this case, we've actually already had several closes, weekly closes below the 200-week moving average. So 1, 2, 3. This would be the 4th week that we're closing below it. And again, in bear trends, we can live a really long time below the 200-week moving average. So that's important to know about. And finally, we will look at AMD. I tweeted about this. If you're not following on Twitter, definitely take a look at the link in the description. That's where I share more real-time stuff because obviously that's where I can kind of make a really quick update. So we'll start with the weekly. Same kind of idea. Several weekly closes below the 200 week. In this case, only 1, 2, 3. Well, yeah, this will be week 4. We're actually shaping up for a little green week here. Okay, that's interesting. So that might be setting up. And of course, we have the CPI coming. We'll see what happens with that, the Fed minutes, etc. But could be setting up an opportunity to short here, right? And this 71 area, I mean, I don't know. So that actually, I guess that would only be about $13. You could see a rally up to the, you know, and that would also coincide with the 200-week moving average, right? You could see some kind of, you know, rally attempt. Something like just, you know, we've had this high, yeah, this little lower high. Like, look, this little rally, that's all it could muster, right? So then you could see something like that, right? That's how price moves, right? I'm not saying that this is exactly how it's going to play out, but it will look something like this. If we continue in this downtrend, we'll make a lower high, we'll come down, make a lower low. We'll make a lower high, we'll make a lower low. We'll make a lower, like that's how it works. So at this point, you don't want to be looking, well, if you get in early enough, you can certainly ride the lower high. Just make sure that you're ready to dump at the first sign of a swing high on a lower time frame. And so this is down about 65% as well, very similar to Nvidia. And let's actually look at the yearly chart for this actually. So we're appreciably below the last year's low, unlike Nvidia, which is just getting there now. Again, this also doesn't mean that it's done yet. So I don't think you can take it either way. Like, oh, well, it's already very low, so it's probably already as low as it's going to get. Not necessarily. In this case, I mean, my God, this rally has been pretty furious. Even from here, it's a 6,000% rally. I mean, this is just a really strong trend move. But look at this, like just, I'll draw this just to, not to belabor the point, but I mean, look at this thing. This is just a big chop box, right? And again, remember, this is your annual chart. So these candles are all 1 year. Now, of course, this is a nice little 3-year run. This is a big dump, like in especially as you're trading it. But then when you zoom out and then you compare that to this move where we're going up, or this move where we're going up, this is just a sideways move, right? And that's important. That's why I think it's so helpful to zoom out to these charts, because you want to kind of get a sense of like, how is this shaping out? Is this going to be more sideways, or is it going to be more of a down only and then a rebound, or a down only and then a sideways? You want to think about the different scenarios so that as they're playing out, you're ready to react, to adjust your portfolio. So in this case, it looks like we're going to be flirting with the high 30s, right? So like 38, 39. And that also coincides with the 10-year moving average. So these like so the moving averages tend to be right at some point. It's kind of like a broken clock, right? At some point, if you're in a massive downtrend, you will slice through that longer term moving average. And in the case of the monthly, we closed well below the 50-month moving average in September, and now just kind of continuing the downside. You can see we've had these little green months interspersed, so don't be surprised if we get another one. Maybe this month closes out green, maybe it's in a green November, some kind of run up into the election. Either way, it's important not to get confused. We had this little period where it kind of so we dumped here, and then we had this period where it kind of paused, and then we're dumping again. So at some point, you can imagine we're going to get some kind of pause. That's the kind of pause where you're watching it closely, and if you're aggressive, you're going to short the hell out of that thing. And these are just, I just kind of labeled these like these massive declines after these big swing highs, right? We just had one at 67%, or we are in the process of one at 67%. But notice this one was actually 96%. This one was 93%. This one was 82%. This one was 90%. There's no reason why we couldn't get like an 80% drawdown, right? Let's see. What would an 80% drawdown look like? Well, there you go, right? An 82% drawdown would get us down to like that 29 area, which structurally kind of makes sense, right? That doesn't mean we're headed down there for sure, another 50% decline, but it definitely is on the table. It's something to be aware of. Control risk, respect risk. So that is the overview. I'm obviously staying fairly high level. I didn't really kind of jump into daily charts, for instance, but important to see that overall trend and know that, again, semis tend to lead. And so when they do turn around, that's going to be really important to make sure that we're aware of. And we'll definitely be watching it on this channel. If you haven't already, definitely subscribe, hit the notification button, like the video if you enjoyed the content, if it was helpful. We'll be keeping a close eye on this because there is a boatload of money to be made on the other side of this. And again, if you're aggressive and you pick your spots, avoid getting short squeezed. You can also make money to the downside as well. Just a little bit more complex, a little bit more harrowing, but it's that bounce that we're waiting for, the one that we can tell is going to be sustained, so we can get in early on the trend. Maybe we're going to rally for 20 months and we can get in on month 5. You don't have to get in at the bottom. That's a fallacy people tell you. So thank you for watching the video. We'll see you again next time.